Hello and good time to you. Daily analysis of the EUR/USD currency pair on February 16th. On the 4-hour time frame, after a move with displacement, the price moved downward and finally reacted to the 4-hour POI zone. Currently, it is in a consolidation range, with liquidity on the buy side and has formed a sell side. According to current market analysis, it is predicted that the price will likely experience a brief short-term drop to collect the resting liquidity on the sell side. After this initial move, the price is expected to eventually react to the balanced price range zone or the rejection block zone. Following this reaction, it should then continue its overall bullish trend in order to collect the liquidity sitting at the pool as well as the drawn liquidity levels above. Also, in another scenario, the price could move upward, collect the liquidity on the buy side, react to the BPR zone, and then move downward to collect the liquidity on the sell side, and finally enter a bullish phase. But by carefully examining the underlying fundamental economic factors, we can clearly see that the euro currently possesses significantly more robust fundamentals for a sustained bullish move compared to the USD. Furthermore, the overall market sentiment for the US dollar remains bearish. Even the non-farm payroll report, which was released just last week and contained exceptionally positive and strong data, but the CPI that was released on Friday wasn't very impactful. And by looking at the DXY index and this price movement, we can see that it hasn't had a significant effect on the overall trend. Also, when we take into account today's impact in the US, we can expect that the USD is unlikely to demonstrate any particularly notable or significant price movement. And it is primarily the euro that might potentially experience a sharp and strong move, which can be analyzed on the 1-hour time frame. We can observe the price movement, and traders who use the smart money and ICT approach, with the help of the liquidity detection indicator, can identify the liquidity on both the sell side and the buy side. They can pinpoint these areas, which are the zones of price movement and liquidity attraction. The price can move toward these zones to collect liquidity from either the sell side or the buy side. And after that, we should look for trading opportunities in the market. Right now, we can see that the price is moving toward the buy side liquidity, and it is likely to collect the buy side liquidity, and after that, it may move downward. If it collects the sell side liquidity and then closes again within that range, as a trading strategy, it is considered a valid setup, and we can use this opportunity to enter a buy position. We should place the stop loss behind the previous swing or swing low and set the target at the 1.1833 level for a risk-reward ratio, 1-to-1, 1-to-2, or the liquidity level at 1.1926. Also, by analyzing the price action, we can see that every time the price tried to make a lower low, it failed. There was only a stop hunt or a liquidity sweep, and then it moved back up, which indicates buying pressure in the market, and we can confirm this by keep in mind that the price might only be able to collect some liquidity towards the sell side. However, if buying pressure in the market increases, the price can continue this trend. It can continue its upward movement and eventually, after collecting liquidity, enter a bullish phase, and this should be considered without any correction. The next scenario is the price moving upward to collect liquidity on the buy side, and if we have a liquidity sweep, it could move downward. We might also see a stop hunt from the sell side, and ultimately, it could be accompanied by a bullish trend. With a 15-minute time frame analysis of the EUR/USD pair, we see an accumulation move during the Asian session, and we need to see how the price action unfolds in the London session. Of course, there is a bullish order block zone located below the consolidation and the Asian session. This is during the early New York session, where the price can reach the 50% level. The order block could push the price further down with selling pressure, targeting the liquidity on the sell side. It could sweep the liquidity from both the New York and London morning sessions, and then be accompanied by buying pressure. However, if it moves upward during the London session, it could sweep the buy-side liquidity and then close again within the consolidation range, indicating that there is still selling pressure in the market, and from this situation, we can consider it as a strategy or Orion soldier and enter a sell position targeting the swing low in the market. But the best opportunities are buy positions that move in the direction of the market trend. Wishing you success and profitability.